we are moving into a discussion on company accounts. As you can see on the screen, so there are several things we are going to look at here, especially those that are concerned with the preparation of accounts of a limited liability company. So in the introduction, we are saying that the accounting rules and conventions for recording business transactions of limited liability companies and preparing the financial accounts or the final accounts. The way we do it, the rules and conventions that we follow are much the same as in the case of sole traders and other forms of businesses. We are talking about the fact that the accounts of a limited liability company are the same in some aspects because of the fact that the way we record the business transactions of a limited liability company is the same as for other forms of businesses like the sole traders, who I think we have already seen in the discussions we've had. Just like the way we have seen for other forms of business, a limited liability company will maintain a cash book, a sales day book, a journal, sales ledger, purchases ledger, and all the other accounts like the nominal ledger that we have seen that are maintained by a sole trader. On top of that, the limited liability company will also prepare an income statement and a balance sheet. Income statement being what we mentioned the other time is the statement of profit or loss and other comprehensive income, and the balance sheet is what we mentioned was the statement of financial position. However, there are certain fundamental differences between the accounts of a limited liability company and those of other forms of business. The first fundamental difference is in the legislation, or what we may say, the fact that the accounts of a limited liability company are viewed or reviewed by the registrar of companies in most jurisdictions. So the activities regarding the preparation of accounts of a limited liability company tend to be extensive in nature because of the fact that the Companies Act stipulates or defines certain minimum accounting records which must be maintained by these companies. The company law specifies that the annual accounts of a company must be filed with the register of companies annually, meaning that if it is a public limited liability company, then the public should be in position to inspect those accounts. The detailed requirements or the requirements that are stipulated in company law are extensive or detailed in nature because the law would require the company to disclose as much information as possible. So there is minimum information which must be disclosed in the company's account. That's why you see some of these limited liability companies, especially those that are public, which have public accountability, publish their statements in the media. You would see that there are financial statements that are published. It is not by accident, or it is not a show off. It is a requirement by the national legislation governing the activities of limited liability companies. You may be aware some of these companies are owned by the public. The public has a stake. Some of the shareholders are the public. So the public have their own requirements which must be met by these companies. The public is interested in the profitability, is interested in the financial position of the company. So you find that whereas a sole trader may not publish the accounts in the media, some of these limited liability companies are required to publish their financials. However, we need to make a clear distinction between what would be limited or unlimited, because time and again we interchangeably use these terms. Find that some cases people may talk of unlimited company, in other cases limited liability company. So what would be the difference between the two? These terms unlimited and limited liability. Now when you talk about unlimited liability, if a company has unlimited liability, it means that if the business is not in position to pay its debts, then you, the owners of the company, you, the owners or the proprietors of the company, you become personally liable for the unpaid debts. You have to be very, very careful at formulation stage. Is your company having unlimited or limited liability? If it is unlimited liability, as I've mentioned, you, the proprietors, you become personally liable for the unpaid debts, and you'll be required, if necessary, to sell some of your private possessions with the objective of repaying those debts. On the other hand, if your company has limited liability, it will mean that the maximum amount that you as the owner you will lose in the event that the company becomes insolvent will be limited. Will be limited to your share of capital you contributed to that business. So it means that the terms limited, unlimited have a bearing on the payment of debts. If we are not in position to pay the debts, does the arm stretch to my personal possessions? If the answer is yes, then our company is having unlimited liability. If the answer is no, and I'm not supposed to sell my private possessions to repay debts, then the liability of our company is limited to the capital contributions made during the formulation of the business or over the life of the business, because you can actually buy shares partway the life of the company. So this one you must take good note of it, because in most cases people fail to distinguish between a company with limited liability and a company with unlimited liability. Then the other very, very unique feature with company accounts is the share capital. Unique feature is the share capital. So our next discussion goes into share capital. We are going to look at the categories of share capital and also look at the process of issue of shares. So I want any comments. If you have any comments on this discussion, limited, unlimited liability, please leave the comments or questions in the comment section below. I'll be able to get back to you on email to address your question. So I want you to go to the next lecture video on share capital. Thank you.